Do you own a property rental business? Are you running it through a limited company or an unincorporated business? Are you wondering whether you should incorporate? There are advantages and disadvantages to incorporation, and, if you opt to incorporate, you will incur some upfront costs. One of the main disadvantages is that stamp duty land tax has to be paid again, as the properties are being transferred to a connected company, and this is based on the market value of the property. You may also realize a chargeable gain when you dispose of properties that you own personally to your limited company. If you are thinking of starting a property rental business and running it as a limited company, you will need to set the company up. Once set up, the company will need to acquire the rental properties. Stamp duty land tax will be payable when the properties are purchased. One attraction of operating as a limited company is that you will pay corporation tax at 19% on your profits rather than income tax at 20%, 40% or 45%. However, a company does not have a personal allowance, so corporation tax is payable from the first £1 of taxable profit. Remember also that the rate of corporation tax is due to increase from 1 April 2023 for companies with profits of more than £50,000, but it will remain below the higher and additional rates of income tax. You can deduct expenses wholly and exclusively incurred for the purpose of your property business when working out your taxable profits. But what about capital gains? If your limited company disposes of a property, your company will pay corporation tax on any chargeable gain at the corporation tax rate of 19%. By contrast, if you dispose of the property personally and you have income and gains in excess of the basic rate limit, set at £37,700 for 2021-2022, you will pay capital gains tax at 28% on the disposal of a residential property, and at 20% on the disposal of a commercial property. If your income and gains do not exceed the basic rate band, you will pay capital gains tax at, respectively, 18% and 10%. However, your company will not benefit from the annual exempt amount. Your company must pay corporation tax on any chargeable gains as part of its corporation tax liability, and this is due 9 months and 1 day after the end of its accounting period. If you make a residential property gain personally, you must report it to HMRC within 30 days, and you must make a payment on account of the capital gains tax due. Annual tax on enveloped dwellings. If your limited company holds residential property valued at more than £500,000, you will need to consider whether a charge to the annual tax on enveloped dwelling arises. However, you can benefit from relief if you are running a qualifying property rental business. This will be the case if you are carrying on a property rental business on a commercial basis with a view to profit. Extracting profits from your property rental company. Although you may pay less tax on your rental profits if you run your business through a limited company, this is not the full story. If you want to make use of the rental profits for personal use, you will need to extract them from your company, and this may trigger tax and national insurance liabilities, depending on the extraction route taken. We can help, however. Incorporating an existing property business may involve significant stamp duty and capital gains tax payments unless care is taken with the way your company is set up. If you need help, please call our property accounting and tax experts on 020 7330 0000.